Hi guys, this is Savvy Money Show with me, your host Sean. Today we're talking about my picks of the day and my plays of the day. Well, I'm going to start with Costco. Now, I've called each one of the Costco's run-ups. None have had a pullback. I think if it pulls back below 320, I'll be jumping in. Costco is a company that doesn't make money off of its groceries, doesn't make money off of its produce. It just about breaks even, just above breaks even. Yeah, people want to go there for the samples. They want to go there for the bottomless drinks and the huge hot dogs, don't forget. But they make money on the food they sell in the cafe, and biggest money earner is the subscription base. To get in, you have to be a subscriber, and I know from my family that they go in and they might pay yearly fee and might go once or twice. The other thing is they have their own brand, the Kirkland brand, and it isn't them who are producing it. They find the best retail producers in their store, and they say to them they have to start producing under the Kirkland brand. And where their operating margin would usually be 16%, then their operating margin falls to 14%. And what happens then is, although they you'd think, oh, but they're losing 2%. But they get that back on the fact that they don't have to market it. That all the marketing's done by Costco, and where it's sold in bulk, they sell a lot more. So they end up doing okay out of it. So I think if it drops below 320, it's a buy. Remember, I said at 295 it was a buy. AMD. Now, remember I told you at 40 to buy this. Hope you did. Now, I did. I sold at 77 and moved into Intel. Why? Because Intel has a huge thing with Mobileye. I know their 7mm chip is going to hurt them, but trust me, they're signed contracts with Neo, with Ford, with a load of companies with Mobileye. Their whole business structure isn't on a 7mm chip. And don't forget, AMD used to be a subsidiary of Intel. Now, it's dropped quite a bit. If it drops below 70, I think it's a buying opportunity. Now, Facebook. Again, the tech stocks are being hit. People are taking their money out. They are going into they think because of the vaccine they're going to retail, they're going to cruises, airlines, and travel stocks, you know. So if this drops between 250 a share, 250, 255 goes below there, I'll be loading the boat. Now, Clsk, again, one that I've caught each run up, and I've told you about each run up. I've been lucky that I've caught and sold. This time I think I'll hold on to. I think if it drops below 210 to somewhere in the 210, 220 region, I'll be buying. And I think this is an amazing company to hold. You know, its dividend is only 2%, yes, but it has amazing growth, and I just think this is a company that most people should hold. Anyway. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Savvy Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate, and if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Staq has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. Now, there's this one, if you are into a restaurant and a tech company, it's called Sushi. It's ticker symbol KRUS. Now, if you don't know, it has a patent for its systems. It has that little conveyor belt that goes around with the sushi bowls on. It has microchips in it, so it tells the kitchen when it needs certain dishes. It has an automatic washer that also tells them with a scanner when more of a certain dish is done. It has an automatic rice maker to help the sushi chef, so you need less people in the kitchen. So it has less overheads, so it can keep the prices down, attract more people. Now, here's one I spoke about before, and it's technically a penny stock, Cumulus Media. Now, what people don't seem to realise, there was a spike there after I mentioned it. Why was that? Well, they had they've over 250 towers that are worth about $1 million each, and that's worth $250 million. They have sold some of them for $200 million. Now, people, these towers wasn't actually on their books of assets before. These towers weren't considered assets before, but now people are going to start considering them as assets. People are going to start taking notice. The radio is going to be used in the election, and I think it's cheap enough stock. PE ratio of 1.72. Earnings are coming up in November. It's one to look out for. I think we should have a price target of $15 on it. Anyway, I hope you've enjoyed today's show. I'll see you in the next one. Stay safe, stay savvy, stay investing, and goodbye.